Okay, folks, let's go ahead and take a look at our two trades from last Friday. It is the 25th, so we are Monday, May the 25th, 2020. Happy Memorial Day. Let's go into these trades. We only had two trades, an initial position here in FXI, and then a laddered position here in XHB. Really exciting stuff to go over in XHB, so I'm excited to do that. But let's start by going into FXI. This is just pretty typical strangle trade for August expiration. Two contracts, took in $1 worth of credit, so this is a $200 position, looking for $100 worth of profit. We have really a pretty nice chance to make money on this trade. So looking at, what is that, 16 and 17, 33%, yep, 33% probability of not making money currently on this particular position. We go to the charts. Let's just pull up FXI on our chart. We've got 32 and 42, so these are our marks. I really like this position here, especially on the put side, because this is below our low there in the middle of March. So I like that. We may get challenged here on the call side, but for now I really like this 80% on either side type of position. So I think it's going to be good. Now let's go back to XHB because that's really all there is to talk about there for FXI. So going into XHB, let's see what all we can find. So September position here, so we had our initial September position. So we sold the 23 put 21 40 call. So 23 put 40 call, bought for protection the 42 call and 21 put. So when we go to XHB, it's going to show. There we go. Perfect. Okay. So when we look at the original position, we see that the 40 call, and we see right here that our position is centered right over the 40 call. Okay. Now going all the way down to 23, you can see here that now we're risking 14.38, but this is as far as we can go. This was the original position. Okay. And we were down, right? We were down. So what we've done is we've changed this 23, right? So 23 was our initial break even on the last time, and what we've done is, because we got challenged on this call side, we went ahead and adjusted this position significantly to the call side, because it's likely that we weren't going to get challenged now all the way down here. So I mean, we'd almost have to lose 50% of value, right? So close to 50% of value in order for us to get challenged on the put side. So we moved this up, and now we've even got almost 20%, right? So we've got an almost 20% move to the downside and just under a 10% move to the call side. And really what we're going to be hoping is that we begin to get pretty significant decay. And this is going to take some time just because of the way that our deltas are currently structured. So what did we do here? And I actually want to go to my options right here. So let's go all the way down to the XHB. Okay, perfect. So you can see here, 40 call, we have 6 now. So what I want to do is I want to take a look at this trade. So as you can see, our initial price was 71 cents. We're down pretty bigly, to use a political term lately, bigly. But what I want to do is I want to show that what we've done is we've taken now this average price, and essentially what we've done is we've added significantly more credit to these two positions, or these four positions. Okay, and so we've got these right here that are laddered in, and we've got this particular price right here. Okay, and so what's important about this is if I go to my working orders, let me go here to the working order. Okay, So if I go here and I look at this working order, we see that we are trying to close this iron condor, and we're going to try to do it for a 424 debit. But if we go to the same closing order, what we're going to see is that in order for us to get to a 424 debit, we're going to end up taking off the first two that are going to come out, okay? And so what this means is that, and I'll show you here, a very similar in GDX. So in GDX, not this one, but here in August. Is that right? Not quite. Maybe GDX is the wrong one that I have on right now. Let me pause and find that just real quick. All right, it was in XLE. So in this XLE position, you can see that I am really wide here on my break evens, and if we go down to XLE, you can see it's because on this 36 call, what was originally a 36 call, 37 call position, this price, because I laddered into this particular position, is so much higher than it was before, okay? And so basically what that means is that I've added credit in a really systematic and really mathematical manner in order to greatly lengthen my break evens here. And so when I go back to XHB here, when I get this particular position off, it's totally going to change the amount of credit received in that initial iron condor position. And so it's going to get to the point where that iron condor position, you know, I might get close to break even, make a couple of dollars per contract on this new iron butterfly that I put over 40, the 40 and then the 30 and then the 50. What that's going to mean is it's going to really help out that iron condor. And so I'm going to end up profitable if this particular part of the trade, this laddered part of the trade, really works. Okay. So that is the trade right now, which is good because my XHB position for June, I've got to decide to do something this week about it. This 38 call is even still kind of getting in the way here of this, but we'll see what happens with this particular position. I've got this straddle on, so this is really where we're at. These were the trades from this past Friday. Really solid trading. Really liked where we're at with these particular positions. So if you have any questions, reach out to me at Ryan@sellthatoption.com. Otherwise, happy trading.